Welcome to the Sirius report. This is Paul, and once again we're going to return to the subject of gold and silver, why we continue to see rather large amounts of gold and silver moving from London to New York, what it means. There's been a lot of speculation about what it means. I think some of it is erroneous, or at the very least it is not something that at this point in time is verifiable. It is merely a supposition based on statements that have been made by people like Bessent, the US Treasury Secretary, for example. But first, I think it's worth noting with regards to silver itself that there is a forecast that we'll see a fifth straight year of a market deficit, with what that means is demand would outstrip supply. Supply could grow by as much as 3 to 4%. But it won't be enough to obviously satisfy the demand, which could therefore lead to somewhere in the order of about 160 million ounce market deficit. Whilst the gap between supply and demand will shrink by about 19% or so from last year's level, it's still going to be significant. So if you have a supply shortfall, it's going to have to be filled, if it's not available in the ground, by metal that exists above ground, which therefore arguably could, and I stress could, make prices higher. And obviously it is all part of this ongoing issue of physical supply versus demand being a broader problem as we're experiencing between London and New York. There is no doubt you're going to continue to see, in terms of silver, growing industrial and investment demand, without any shadow of a doubt. We're going to see it in photovoltaics, for example. There is no doubt, seeing as the big thing now is AI, you're going to see a huge amount of demand for silver on that basis. Of course, silver's used in circuit boards, semiconductors, in terms of electrical resistance, and the list goes on and on. It's used in data centers. It's used for electrical transmission. So therefore, if we're going to, as we expect to see more and more of this industrial revolution, silver's going to need to be utilized as it is in the automotive industry, for example, and in battery production. The question, of course, is as we've seen in recent years, given the enormous amounts that China and India have been buying, will that continue? Is the United States' seemingly desire to be this number one nation in artificial intelligence, which I would dispute, but anyway, they're going to require an enormous amount of raw materials, including of silver also. So no doubt in some people's minds, given central banks don't buy silver, but they buy gold, that for retail investors, you're likely to see investment demand also grow because of all the uncertainties about the United States, its foreign policy, tariffs, obviously broader concerns about the financial system and economies. So on that basis, the expectation could see that deficit between demand and supply continue through this year and into next year and beyond. And therefore, that's a very logical explanation for why you might have physical silver shortages. With gold, it's a different issue, although it is still used for industrial purposes. Just as a small example, every mobile phone has a very small amount of gold in it, but also it's worth noting that we're starting to see some gold shortages in parts of the Chinese market for gold bars. Also, South Korea appears currently to have shortages, and this can be a knock-on effect of these clear shortages we're seeing in the West between London and New York. It's also worth noting the following. If you look at the Royal Mint in the United Kingdom, they're saying that gold bullion sales are at record highs because they want people protect themselves against geopolitical, political, economic turmoil. Also, you're exempt with gold in the UK from capital gains tax. It's all issues in the UK regarding Labour government's proposals to change the capital gains tax thresholds and values. So certainly we're seeing sales of gold bullion increasing. And it's interesting, if you look at the Royal Mint, they've reported a 9% increase in its revenue from gold bullion sales over 2024. Okay, that can arguably be part of the fact that gold prices have set record highs. But if you look in the final quarter of 2024, sales increased over 150% compared to Q3 of 2023. And they've also witnessed a significant rise in sales across all bullion categories, meaning gold bars and gold coins. And obviously the number of people purchasing gold increased by over 10%, with revenue from bullion coin sales increased by over 55% in Q4 of 2024. And the list goes on. And if you look at the end of January of this year, obviously the price of gold reached a record high of over $2,700 per ounce. And despite this, buying continues to be very brusque. And I think there is this combination of economic uncertainty, to some degree in the West, geopolitical volatility, maybe. That's led to gold prices hitting obviously multiple all-time highs. And obviously on that basis, if we're starting to see a lot of demand at retail level in the United Kingdom, therefore the question is, are we also seeing it in other jurisdictions throughout the world? And I don't have the list of everything, but we're certainly seeing evidence of that. And it's therefore just making some broader observations as to what we're seeing in physical markets across the world. Now, there was this statement made, if you go back to the middle of last year, by Scott Bessent, where he said, we're at this unique moment geopolitically, and I could see in the next few years that we're going to have some kind of grand global economic reordering, something on the equivalent of a new Bretton Woods. Or if you want to go back, like something back to the steel agreements or the Treaty of Versailles, there's a very good chance we're going to have that over the next 4 years, and I'd like to be part of it. So people have kind of looked at this and gone, oh, well, maybe this is in reference to the fact that the United States government or the Federal Reserve is buying up gold, and it's all going through the comex because they're trying to replenish the United States' gold stocks, which is supposed to be 8,000 tons, and which isn't the case because there's hardly anything that belongs to the United States anymore in the US, maybe a matter of a few tons, and the rest of it belongs to the Bundesbank. But that's just circumstantial evidence. It's one thing saying as well, we want to monetize the assets in the United States, but there's no evidence that relates to gold. It might do, but again, it's circumstantial. It's putting two and two together and coming up to a conclusion which could be correct, but without the evidence, I would file it under speculation. Now, for sure, we can go back to the point we've seen huge amounts of gold, for example, moving from the United Kingdom. They've turned up in COMEX vaults like Brinks and HSBC and JP Morgan. That is absolutely true. But, we also saw very similar things happening only a matter of a few years ago, really at the sort of start of the pandemic in early 2020. The figures were comparable, and it was literally almost vertical increase, not exactly overnight, but very rapidly, around March 2020. Now, that might be obviously indicative of a belief that there are concerns about supply. Now, there has been rumours, in part, that this could be to do with Trump putting tariffs on gold. Now, I don't doubt there are people who believe this and genuinely think that is a likelihood, or at least a distinct possibility, which could be encouraging a lot of gold to head west to the United States. So, it's like going back to issues in March 2020. That was to do with lockdown, supply chain issues. Those broader economic concerns, financial concerns. It wasn't related then to the issue of the United States deciding they're going to reprice gold from $42 an ounce to something else, like $3,000, for example, as has been suggested recently. the US is going to audit its gold and therefore it needs to replenish the 8,000 tons that have gone missing. Well, this is all fine except for one thing. If the United States reprices gold at some figure, then they are effectively putting a floor under that price. Also, if they were to do this, you can say, well, they might be able to replenish some of their financial stock by going, well, here's another $1 trillion, $800 billion, but that is meaningless. I mean, that'll be chewed up in a matter of months because at the moment the US annually still running $2 trillion a year deficits. The other thing is, if you then start to suggest that in some way or other that you're going to not back your currency with gold, although that's been also suggested as a possibility, then you start to undermine the fundamental principles of the dollar, the US dollar, US Treasury complex. If you reprice gold, and let's say if you're going to do it because of the $36 trillion debt, it would have to be a lot higher than 3,000. Is the United States seriously going to give up the dollar as a world reserve currency so voluntarily? Is it going to wreck its US dollar, US Treasury complex? I think not. Now, of course, never say never, but there's no actual evidence to suggest they're prepared to sacrifice the dollar on that basis because they've been very clear. They want a weaker dollar. They want interest rates to be slashed. But they also want the dollar to retain its world reserve currency status. Well, if you start trying to back it with gold, which means you'd have to slash fiscal spending, which the United States is not going to do, because then it will be in serious trouble. Yes, you can say we're going to cut expenditure through the DOGE initiative, but how much are you going to cut it by? $50 billion, $100 billion? It's not going to make a scrap of difference if you're running $2 trillion deficits. So again, I just think it's something that kind of fits a pattern. Therefore, if you put other points together, then the belief is, well, it all hangs together. That must be what's happening. Yes, physical buying has increased massively. We know that the gold inventories in the three largest comex vault have increased in 2 months or so by, I think, 14 to 16 million ounces. That's a significant increase. It puts the physical gold holdings a little bit higher than 2020 pandemic. I mean, there is also no doubt that if you look in terms of the comex, there are, I think in January it was about 19,500 contracts delivered. We are not seeing anything remotely approaching that for sure. That's absolutely true. I mean, and if you look at the so-called combined total in the comex, it's roughly about 35.5 million ounces. We know that the London Vault's been depleted and withdrawal times are taking 8 weeks. They're saying it's because the sheer volume that has to be withdrawn, and you can only withdraw so much in a week because there are only so many slots and you can't book any more slots, so that's why it's taking longer. Well, maybe that's the case and maybe it isn't. But certainly if you go back to November time, the United States has switched from being a net gold exporter to a net gold importer, and London vaults have suffered correspondingly. I mean, no doubt if you look at gold prices since October 2023 as an example, they've risen from about $1,800 an ounce to 2,800-ish. That's despite the fact that interest rates in recent times is still significantly higher than you would expect gold to rise on that basis, and it's because of concerns, amongst other things, about inflation. And we're seeing inflation data in the last few days for the United States with producer price inflation and CPI that suggests that's the case. The other thing is, there was interesting, if you look in terms of the CFTC, their net futures position, it's certainly looking at the moment that if you look at the overall, the longs are certainly significantly higher. So net long position is buoyant. Short positioning is the lowest it's been, ironically, no surprise, since the pandemic. So there's certainly indications. The question is, if it isn't the US government or the Federal Reserve buying up all the gold, who is? What could it be? Well, yes, let's say part of it is because of the issue of tariffs. So the COMEX wants to make sure it's got enough gold, but the argument is it should anyway. One thing that's absolutely clear, and we have seen this arbitrage between London and New York. So is that part of the reason why some are trying to take advantage, which means why a lot of gold, for example, is heading to New York? That's a distinct possibility. That could be one of the reasons. Another reason is there could be trying to cover short positions, and suddenly the need to cover short positions has required a significantly sharp increase in demand. Well, that could indeed be possible. Because obviously there's always that risk. If you don't have enough gold to cover a short position, then all hell can break loose in the market. So that could be another reason. It could simply be that also in the COMEX, there's quite a lot of high net worth individuals who suddenly want to take physical delivery. That's entirely possible as well. It could also be, for example, there are players, international players, who hold significant amounts of gold in the COMEX and they want physical delivery because all of a sudden everybody's rather concerned about leaving metal in foreign jurisdictions. That's entirely possible also. So you get the understanding here that there could be a variety of reasons as to why this sudden surge has happened. Now the question is, does this continue for another few months or is it ongoing? Does it suddenly disappear as fast as it appears? Over a period of time, of course, and that's entirely possible. It's what we saw in 2020. There's no doubt about it. But I think another point making, if the US government was trying to restock its gold for a future gold audit, for example, or because it wants to revalue gold, then why would it do it through the COMEX? There's no need to do it. That's just advertising you're up to something. There's opaque markets where the United States government could easily buy up gold and no one would be the wiser about it. So I don't see any reason why they would shove it through the COMEX either. Now, there could be a situation where this is indeed the case, as unlikely as it may seem, given what the factoring in what could happen to the dollar or the US Treasuries. And because the United States wants to keep the dollar as a world reserve currency, there's also all the issue currently and contradictions because you put tariffs on, it risks in creating inflation. It could strengthen the dollar and Trump wants a weaker dollar. So it's very hard to be precise in our assessments because of these contradictions. And I know there are people trying to find reasons why you can plug the gap between all these contradictions and somehow make sense of it. Now, I would never say never. I also would never say never with regards to the US policy and decisions they make, because they have this very peculiar tendency to do very bizarre things at the best of times. But at the moment, it's just a theory. It's a supposition. There's no substance to prove it. And at the end of the day, I mean, if you look at the, say 50 million ounces have been shipped to the COMEX in the last couple of months, for argument's sake, it's a drop in the ocean. It's nowhere near anything approaching 8,000 tons. And if that's going to hike the price based on 50 million, if they want to buy 8,000 tons equivalent, then the question then starts to become, well, where can they source this from? Because it's absolutely clear there are shortages appearing elsewhere in the world. There's going to be a limitation as to how you can get your hands on that sort of gold. And therefore, on that basis, it is going to be extremely difficult unless you allow the price or you want true price discovery. But equally, if gold keeps rising, and then, you can sit there and try to ignore it and pretend it's not an issue. But at some point, it's going to have some material impact in a broader sense, because you're going to start to attract more and more institutional investors. Maybe 3,000 is a psychological threshold. We don't know. So the point of this podcast was to highlight discrepancies, highlight gaps in our understanding, and really to assess the fact at this point, no one really knows exactly what's going on. What we do know is huge amounts of gold relatively since the start of the pandemic have been moving to the United States. Why exactly? We've offered some reasons and also contested some reasons that people think it is the case. And in the coming months, I think it will be clearer what exactly is going on. And we'll just continue to track that and make sense of it as gold and silver markets continue to move one way or the other in the coming months. And with that, we'll end this podcast. Thank you very much for listening, for all your support. Please like, share, comment, subscribe. Share it with other people. We're trying to grow the channel, and we've obviously got a track record of understanding gold and silver markets for over a decade. We've accurately predicted when we'd start to see movements and why we'd see movements. So please share and help us grow the channel. And with that, I'll say goodbye.